in the world segment. If you're worried you're missing out on the Bitcoin craze, you're in good company. Governments across the globe have watched the digital currency take off, and now they want a piece of the action. This week, Jerome Powell said the Federal Reserve is seriously considering creating a digital dollar that would exist alongside the traditional dollar. The European Central Bank chief wants to do the same for the euro. In fact, a recent survey found 86% of central banks are exploring the idea. To understand the idea, consider cryptocurrencies like Bitcoin. These are decentralized systems created by private actors that theoretically work like cash. You instantly purchase a Tesla by sending them Bitcoin. No credit cards or bank checks are needed. But this only works because Tesla has agreed to accept Bitcoin as payment. It isn't legal tender. No one has to accept it. Central bank digital currencies, on the other hand, would be legal tender. Imagine the government wants to send everyone a stimulus payment. Rather than taking weeks to transfer money to bank accounts, print checks, and mail out debit cards, the government just sends the money directly to a digital wallet on your phone, which could then be used to buy groceries or pay rent. This is already a reality in some parts of China. In pilot projects across several cities, the Chinese government has sent small amounts of digital money to people via lottery. As of November, consumers had made 4 million transactions using the e-yuan, totaling $300 million worth of spending. The main benefit of digital currencies, as Treasury Secretary Janet Yellen told the New York Times this week, would be
faster, safer, and cheaper payments.
Now, countries are approaching this idea cautiously because they worry about damaging their financial system by undermining institutions like private banks. But some governments also see an opportunity to disrupt the global financial system to their benefit. For example, a digital euro could help the EU chip away at the dollar's dominance in international trade. It's a long held goal that has only become more pressing as the United States government has weaponized the dollar. When the Trump administration imposed sanctions on Iranian individuals and businesses, so called secondary sanctions meant that European companies had to stop doing business with Iran, or else they could be cut off from the US financial system. European nations tried to set up a mechanism to skirt the sanctions, but it was a failure. Digital currencies could offer a better solution. China and Russia would also like to challenge dollar supremacy, but they may have an additional, darker motivation. As the Financial Times points out, libertarians have championed cryptocurrencies because they keep the government out of commerce. State-backed digital currencies can empower governments by providing detailed information about people's business dealings, who's transacting with whom, what they're buying and selling, where they're located. In the right hands, this information could be used to set economic policy or target money laundering. In the hands of the Chinese Communist Party or the Kremlin, it could be used to crack down on ethnic minorities or political dissidents. So, digital currencies may end up following the same path the internet has. In the early days, people thought of the web as a decentralized, free, and open global system that would empower individuals. And to be fair, it has fulfilled that promise in many parts of the world in many ways. But in other parts and in other ways, it has become yet another tool of authoritarian government control. One more sobering and unintended consequence of the great information revolution. Thank you to all of you for being part of my program this week. I will see you next week.